What is going on, everybody? Happy Friday morning. Welcome into our Trade to Black podcast. I'm your host, Shad Dale. It's good to be back. How's everybody been? It seems like the cannabis industry has been holding its ground this week in all these latest earnings. I know a lot of people were holding their breath to see what this Q2 would unveil, but right now it looks like the industry is holding its ground. As I said, Canopy Growth, you guys watching the stock right now, it's up 36% on the day based on their latest print. So we'll talk about that and quickly top line that, Anthony and I. As well, we got Anthony Coniglio to come in and talk about his latest print, and Charlie Bachtell from Cresco Labs. So a lot I missed, and I hope you guys got some great takeaways from Anthony this week, who did a fantastic job with Boris and a few others. But all in all, it seems all is good right now in the cannabis industry at these latest earnings. So with that, let's continue to build some momentum as the earnings roll on, and welcome in AV. Job well done this week. But yeah, I would say, like, for the most part, it seems like the industry is holding its ground. I know there are some reports that Pablo came out earlier this week preparing people for the latest earnings, but we were kind of holding our breath. We're talking about price compression. We're talking about efficiencies. But how would you best describe what you're seeing so far?
Stable. It's stable. I think that there's some holes you could punch in several of the MSO's earnings reports. There's also some things you can like in many of the MSO's earnings reports. It's better than I expected. I still expected to see a little bit of top line degradation, maybe a little bit more margin compression than what we saw. But I mean, the big boys reported, everyone for the most part, and gals reported, and I mean, they came in good. They came in good. I mean, I think Boris yesterday was on fire as usual with the interview. I mean, he gave the people what they wanted, clear and concise conversation around Curaleaf, and then some nice color around federal reform potentially on the horizon. So all in all, I mean, I'm happy. I think the tape is happy. It was the one thing that could have rained on our parade for a little bit in the interim if earnings kind of came out stale. But all things considered, they've been good.
Yeah, that's for sure. Well, Dutchie kicked it off earlier this week, and that kind of like set the tone. So it's all been good. But I do want to say thanks to everybody that's reached out over the last couple of days. I had a little health scare with my daughter, who's a type 1 diabetic, and she had quite the scare. But I just got news about 15 minutes ago that she's on her way home from the hospital. So I appreciate everybody for reaching out the last couple of days. And again, job well done by you to hold the fort down and really get some great content, because I saw a lot of the comments, and it was really good. Some high intellectual conversations, and that's what you're good at. And yeah, I thought the interview yesterday with Boris was great. Said some interesting things about rescheduling as well, but there's some interesting momentum. And then Dave Joyce yesterday talking about refiling SAFER relatively soon based on the executive order. And I know you're shaking your head, but there's all these moving pieces. I'm going to do a great script on SAFER banking tonight and the executive order that Trump made earlier this week. So long story short, we'll put that out tonight, and we'll have some more Cannabis in Fives, all presented by our good friends at Dutchie. But with that, it's time to get the earnings season rolling on with more prints. And let's welcome in the CEO of NewLake Capital, Anthony Coniglio, trades in the OTCQB NLCP. Good to see you, sir. How are things?
Good to see you. And gosh, I got to start off. I did not know your daughter was going through that. Family is first, and that's the most important thing in all of this. Yeah. And so I'm happy to hear she's on her way home and she's doing well.
Yeah, I'll never forget last year when she was first diagnosed. We were at Benzenga, and I saw you, and you were a very good friend, and said, you got to get out of here. I was kind of like in daze, but I didn't know what to do. But thank you for being the support that you provide. And enough of me, but you know, all in all, I said off the top, and we're going to get into your specifics, but when we look at the industry as a whole, it looks like it's holding its ground right now, would you say, with a lot of the earnings season, what's going on? Well, what's your takeaway so far, Anthony?
I'd echo the sentiments that you guys were just sharing. I think it's better than what some of us expected. Yeah. I like to see some of the margin expansion that happened. Not surprised to see the continued price compression. We're seeing some folks show unit growth, which is good. Shows that demand for the product is strong and continues to grow. And I've been saying on your show and for the last year and a half that the hemp industry, I really think, has been taking a bite out of the state legal industry. Very hard to quantify, but it was good to see that unit growth, to see some of those sales numbers get posted, and see that margin expansion for some of the operators. And, again, another thing I've said time and again is that the people that are leaders in this industry and that are running the companies in this industry is doing the hard things to create the margin expansion and continue to position their businesses for long-term health.
Yeah. Well, you wonder if the crackdown on hemp is definitely having a reflection on these latest earnings prints, but I'm sure there's some truth to that. But that we'll save that conversation for another day and talk about growth. You just reported 12.9 million in revenue for Q2, adjusted funds from operations of 11.5. You kept your quarterly dividend steady at 43 cents. What stood out as well, you had over $100 million in liquidity and no debt until 2027. Good position to be in. So all in all, how would you best describe the situation that you're in right now based off your latest print?
Yeah. Listen, thank you for the question. Second quarter was a really solid quarter for us. We collected 100% of rent that was due in the quarter, which is really noteworthy given the ongoing troubles in the industry. And I'm sure we'll talk about some of that in a little bit. But we had 4% growth in revenue and AFFO. With respect to the debt, we've been very, very conservative from a balance sheet perspective. We have about $7.5 million outstanding on a $90 million credit facility. So in essence, almost in a completely unlevered REIT, we've yet to find another REIT that has a lower leverage level, whether you look at it on debt as a percentage of assets or debt to EBITDA. So our financial metrics and the liquidity that you mentioned are really unheard of in the industry. With respect to the AFFO, I do want to point out that AFFO, to remind some of the viewers, AFFO is our measure of free cash flow. And when you look at our AFFO payout ratio, since we're a REIT, we pay out a dividend. Our payout ratio is that portion of our free cash flow that we utilize to pay out our dividend. And we came in at 79% in this past quarter. Our target is 80 to 90%. So what that means is that 21% of our free cash flow we retained on the balance sheet during the quarter. And it's nice to have that cushion should there be interruptions to revenue in future periods, which is one of the things that we talked about on our call yesterday.
Okay. So you're confident you can get to that 80 to 90%.
The 80 to 90% is a target. And during the course over the last 5 years since we've been public, 4 years since we've been public, it's varied between the 78 to 85% range. It's really a guidance. There isn't no hard and fast number that we're targeting, but we like to see that there's enough cushion for potential disruptions in revenue and to really support that dividend going forward.
Okay.
Would you attribute the, I guess, financial discipline and the lack of leverage within the organization to the success and the stability that you've seen in the portfolio, taking a measured approach, not overextending yourself, even though you do have the liquidity to tap if you need, but just being disciplined? And that's shown in the quarter over quarter performance and the dividends and the AFFO metrics that continue to perform quarter over quarter.
Yes, I think that's it. If we go back 3 years ago, 4 years ago, we were being criticized for not growing faster. We had very good growth rate. We were 20, 30% growth rate, but people wanted faster growth because it was the cannabis industry. And we took, as you said, a very measured approach to our underwriting. And you've seen us do few deals. We did announce a new deal in the quarter with Cresco, a dispensary transaction, but we've been very cautious and very prudent. And that's what's, I think, served us well so far. Not to say we're perfect. There have been issues in the portfolio. We work to re-tenant those properties when they come back to us, and there'll be issues in the future. But that more conservative posture and that more conservative payout ratio gives us the financial cushion to deal with those issues.
Yeah.
Speaking of that discipline, can you see the using of the leverage and utilizing the debt that you have with that credit facility? Are there certain catalysts that you're looking towards to potentially then start to tap that and get more aggressive, let's say, such as rescheduling, descheduling, legalization in certain markets? Or is it strictly on a case-by-case basis if the opportunity arises, regardless of the conditions in the industry? That's when you make that decision to use that leverage.
It's more the latter. It's nice to know that you have capital available to execute on transactions that can be accretive for your shareholders. And so that capital is precious. And so that's why we're safeguarding that, and we're waiting for the right opportunities. With rescheduling, with some reform in the industry, that will create expansion opportunities, expansion opportunities for the industry, which will only grow that opportunity set. So it's good to have some dry powder and be disciplined today, not have to reach for growth or want to reach for growth, but to grow for quality assets.
You know, when I listen to you, you've said this so many times the last couple of years about discipline, but it really shows. And I don't want to bring up any competitors in the space and what they're going through right now, but this is what you're talking about based on the current conditions and the environment that we're in, is the disciplined approach, is it not?
It is. And all we can control is what's within our house. And it's about doing good deals. Remember, our transactions are sale leaseback transactions. The terms on these leases could be anywhere from 12 to 20 years. So I like to say it's easier to do the deal than to necessarily collect rent for 12 to 20 years in any industry. This isn't only in cannabis, right? Sale leaseback REITs have vacancies all the time. And then you look to re-tenant the property because every industry has defaults in it. This one, unfortunately, more so than others.
Yeah. And then I know within the quarter you had relocated one of your tenants for a retail location. I mean, for those that don't know, what are the conditions where that comes up, and how do you work through that with a tenant, and why do they choose to do that?
Yeah. When we started this business over 6 years ago, we recognized that it was nascent and evolving, and that it was going to continue to evolve in the years to come. Again, 20-year lease. To think that a tenant take a retail location, to think that a tenant would be able to site a retail location in all of their retail locations for ultimate success over a 20-year period would have been short-sighted. And so we went into this knowing that there would be a number of properties in the portfolio where the tenant would come to us and they would say, this just isn't working out for us. And so this has happened a handful of times over the last 5 years. And what we want to be is a real estate partner for our tenants. And so we partner with that tenant so that they could move that license to another facility, optimize the earnings for that business, which, guess what, is good for us because it optimizes the credit quality of the tenant. And so we did that most recently with Curaleaf. We've done that with other MSOs in previous quarters. And we think it's that partnership that really tries to differentiate ourselves with some of the competitors out there, because we know it's really hard to say this property is going to be a winning property for 15 years. It's just really hard to be right on that 100% of the time.
Yeah. I know some people were asking, well, you've got deposits basically to protect yourself. And there was some conversations. You were transparent on the earnings call regarding Air Wellness and what they're going through, revolutionary clinics as well. So with these deposits that protect yourself, how do you manage, I guess, these risks while keeping properties occupied and cash flowing in a nutshell?
Yeah. So again, that AFFO payout ratio does provide cushion from a revenue perspective should we experience periods of time where there's vacancy and we have to pick up carrying costs for a particular building. We've known about revolutionary clinics for a while. That building came back to us in July. We've already shown it a few times. We're actively trying to re-tenant that. We did caution investors that Massachusetts is a difficult market, and that's going to take us some time to re-tenant that facility. When it comes to Air, we've all seen that Air is undergoing a restructuring. Everybody's waiting for the restructuring support agreement to get filed, likely sometime next week is what we hear. But we fully expect that our properties with them in Pennsylvania and Nevada will have to go through some transition. If they'll be part of a wind down or part of a sale, that'll be worked through in the coming weeks. But, in Pennsylvania, we think there's some staying power for that property as cannabis because you have adult use on the horizon. And we've talked in quarters before about another property we had in Pennsylvania that seems to have worked out pretty well because of the demand for property assets. These are difficult situations that take time to work through. But I think we've got the team, I think we've got the reputation, and we've got the time to be able to make the transitions.
Okay. We've got a question here from David Benz. Don't REITs have to pay out 95% AFFO?
It is of taxable income. It's not of AFFO. And when you think about depreciation on these assets, that's a non-cash item. You can go to our press release and see that reconciliation from net income, which is taxable net income, to AFFO. AFFO is free cash flow. So those non-cash items that reduce your tax liability, and we're making sure that it's 90% of our taxable income is paid out. We're fully in compliance with that. Good question. Thank you.
All right. Just Chad, thanks, writes, Mr. Coniglio's response to Luke on X was fire. I missed the response. So should we get into that?
Happy to briefly. I've been very quiet with a lot of what Sam has put out there. Right. It's not really my place. It's not always productive. But when I saw Luke post yesterday that he called veterans stooges for consuming cannabis, and it really struck a chord. Listen, my dad was a World War II veteran, prisoner of war in a German camp during World War II. And so these veteran issues, and I have family and in-laws that have served and are serving in the military. And so it's really an important topic for me. And when I see somebody attacking veterans in a broad way, listen, cannabis is nowhere near perfect as a plant and as a treatment, but let's not attack the people that fight for the freedom so that he could sit there behind a keyboard and express his opinions without worrying about somebody knocking on his door. Let's not do that. And it really struck for me. And that was my reaction to him.
Yeah. Well,
it's never permissible.
Yeah.
And Sam's done, this isn't the first time either. They've done it on several occasions, as it relates to cannabis and as it relates to psychedelics. That's kind of where I draw my line as well.
Yeah.
I felt the need to speak out on it.
Well, I appreciate the comment, Chad. Sorry to take the topic of conversation, what we want to discuss here, but that was a great quote and a great response by you on your behalf. But it all makes sense. And the world we live in, keyboard warriors, right? If we sit down a year from now, what are the top 2 or 3 things you'd point out and say, this is how we grew shareholder value through a tough market? What would you say?
First and foremost is going to be, have we been able to maintain rent collection, and have we been able to re-tenant vacant properties? That's the way we maximize the return for shareholder. We call it the NPV approach. How do we maximize the net present value from the portfolio of assets that we have? And that's all about rent. That's all about duration. And that's all about re-tenanting properties that come back to us.
Yeah. Did you get a chance to see our interview earlier this week with Senator Street?
I saw clips of it. I have not seen the whole thing. It was, from his vehicle. And it was wonderful that he took time out of it.
Yeah.
Listen, I want to be optimistic about Pennsylvania, but I feel like we've had that Lucy moment too many times in PA. Yeah. I draw some optimism that we're still seeing them have the conversation into August here, late into the summer. But we're in a show me period with this industry.
Yeah,
I mean, gosh, whether it's Dave Joyce's post yesterday or comments coming out of the administration, we are absolutely in a show me phase. We all want to be optimistic and hopeful. But
it was laughable. It was laughable yesterday because Kim Ward decided to tweet out, Pennsylvania has a $350 million tax deficiency. And it's like, with all due respect, Senator, you have a solution right here that has bicameral support, bipartisan support. The governor is completely behind it. And you just want to sit there and act like it's not sitting on your desk ready to roll, and just openly in public. But yeah, I'm with you too on David Joyce. Love David Joyce, respect that he is behind the cause. Thankful for everything that he does from a communications perspective, but we need to get that damn thing signed.
Yeah.
Yes. I'm not afraid of Mike Johnson. I'm more so afraid of Cornyn and John Thune roadblocking that. But at the same time, let's introduce it get it on the floor and get it moving once and for all.
Yeah, I agree. There's so much on the regulatory front. And a lot of people have been looking at the executive order yesterday on debanking and getting excited about the impact on this industry. I just don't see it. And I don't want to be the Debbie Downer here. No. But cannabis continues to be a federally illegal business. And the issue for the banks is that they will violate AML and BSA, anti-money laundering, and Bank Secrecy Act rules in dealing with the industry. And some banks have figured out compliance with that, and the large banks just don't want to. So unless there's really a safe harbor, I just don't see it impacting banking for the sector. I want it to. But I just
don't think that executive order by Trump yesterday is a step in the right direction?
No, I think looking at it pragmatic.
But don't read too much into it, is what you're saying.
Right.
Looking at it pragmatically in an order of operations, you need rescheduling before banking. I think rescheduling gives everybody the cover fire. And we've said this for might be over a year now. Getting it off of S1 to Schedule 3 means that you are no longer aligning yourself with a Schedule 1 narcotic. That cannot be overstated how much that means from an optic standpoint.
Yeah.
Banking is not going to happen before rescheduling. I really don't think so whatsoever.
That's my opinion as well.
And I think everybody is probably in agreement with both of you there.
Schedule 1 narcotic it's the worst. It's an anchor around our neck. Once it's gone, things are going to free up tremendously.
Well, you heard a lot of people say in Washington, get it rescheduled, and my views on it all will change based on their stance. So you're right. That's the first step. I bring up Pennsylvania and Virginia as well, because the gubernatorial race is coming up in November. But I look at this and like, how do you, I guess, balance risk? And, you want to avoid taking on too much risk. But as far as growth opportunities, if you see these states flip to adult use, what does that present for you?
Yeah. So there's right now, when you think about the growth opportunities for us, they're generally limited because you're seeing fewer and fewer states flip from adult use to medical use. And even in Kentucky, where you're seeing a new medical market and should need entire infrastructure, because of the lack of general capital availability, there are fewer efforts being able to raise capital to build large scale operations. And so we see that in some of these states that will flip from, say, a medical use to adult use, I think more of the opportunity will be on the dispensary side, because there is decent level of cultivation that exists today. And even beyond the proceeds you can get from a sale leaseback transaction for cultivation, there's added CapEx for equipment and other non-real estate components that can add up pretty quickly. And in a lot of the companies are looking to take a more phased approach into some of these expanding markets, which I support and applaud if we want long-term financial health and financial viability. And so if we have to have a lower growth opportunity for a shorter period of time, to be able to get to the other side of this period and have a much more larger growth opportunity once the industry has greater scale, greater acceptability, greater access to banking, then we're willing to do that.
Okay.
In terms of rents, I've never thought about this until now. It just popped in my head. Can you charge more to a tenant in, let's say, an adult use market versus a medical market, or is it more so a function of these are the market rents? That's not a variable in the equation, and this is how you kind of carry out the lease in a market, let's say for retail.
Yeah, it's not the way we approach it. What we do is we look at a market and we underwrite what we think the revenue in that market will be over time. And so for Pennsylvania, when you're looking at Pennsylvania, you can't just underwrite it as a medical market. You have to expect that pricing will compress over time once it becomes an adult use market. And so for us, the rent that we have to charge on a property is really a function of our cost of capital. So when you look at the advance we make on a property, that's based on the value of the property. So if a property is worth $10 million and there's improvements for $5 million and we provide $15 million, to use a very basic example, for the $15 million that we do ultimately provide, we have a cost of that capital and we need to make a return for our shareholders. Right. And that's part of what drives that rent or that cap rate. But when you look at it from a revenue perspective for the tenant, that's where we underwrite that what's called four-wall coverage. We don't want to understand what's the cash flow profile for that property, and will that tenant be able to cover the rent and pay the rent for the duration of the lease with those price compression assumptions.
Anthony, do you anticipate property values going higher if rescheduling is announced and knowing that 280E tax goes away? Is that factor in at all?
No. In fact, in our base models, we never assume any increase in the real estate price over the life. It's too often in real estate, what people do is they make these assumptions that the property will appreciate no matter what happens by the rate of inflation or maybe a little bit above inflation. And so when you look at that on an MPV basis over, say, 15 or 20 years, you can look like you have a really, really, really good asset. And so we want to make sure it can hit our hurdle return without appreciation in the underlying properties. Now, has there been appreciation in real estate over the last 6 years since we've been at it? For sure there has been, because the replacement costs are much, much higher. If you think about constructing a building 5 years ago, it could have been for a cultivation facility, $300 a square foot. Now it may be $450 a square foot. So to build new is much more expensive, which makes the existing real estate stock more valuable to people like us. And so that's where you get that price appreciation.
I was listening to the earnings call earlier this week with Jim Cacioppo and Dutchie. He talked about certain locations and changing locations. How does that work? And why does that make sense for companies to do this at this stage, knowing that there's a lot of infrastructure, time, money, management, all that sort of thing to place at a certain location-wise? But what makes, I guess, somebody choose a different location at this stage of the game, and how much cost is involved in that?
Yeah, listen, we've done it roughly 4 or 5 times now with our tenants where we've partnered with them, and we've done it for cultivation, but primarily dispensary. Typically what happens is a tenant is looking at their property and they're saying my ROI, my return on investment or my return on capital for that particular property isn't what I wanted it to be when I entered into the property. And I could get a better ROI or ROE by moving this license to another location or by shutting down this property, but they have a contract with us. Now we could be intransient and say, sorry, we have a contract. You have to stay in this location. Or we could work with them like we did to do a deed for deed exchange. We've done that a handful of times to go to a different property, sometimes in the same state, could be in a different state. Then they take that property back, they sell it, and they dispose of it that way.
Okay.
And the costs, yes, there are costs to that. You have employees that you have to work out of. You have some equipment that you can move, some equipment that you have to buy. But by and large, all of those costs, which are borne by the tenant in this case, all of those costs go into that return on investment and that return on capital calculation. And just to make a finer point on this last transaction we did moving a dispensary, the dispensary was in a medical state. That state converted to adult use.
Okay.
The municipality where that dispensary license was decided not to allow adult use sales. So the tenant said, I have a license that I could move to another municipality and get adult use sales, or I could be relegated to medical only. And so it's a better move for the tenant. They're a better credit quality for being able to optimize that return. So we're cooperative and we partner with them to get it done.
Yeah. A couple more questions. Hey, Anthony, I'm in Arizona. I see you've got a net lease with the Mint. What's your favorite state to visit?
Oh my gosh. I've been all around this country for NewLake and previous roles. I'm not going to give you an answer, so I don't want to offend anyone, but it is amazing what this country is about when you get out there. Yeah. I love being in Arizona. I love the Scottsdale area. I love that whole kind of desert Southwest. I love visiting our dispensary in San Diego. Just a beautiful part of the world. So I'm not going to give you an answer, but there's some beautiful, beautiful parts of this country. And I suggest people get out and actually travel this country. It's an amazing place.
It's pretty wild when I think, go ahead, Anthony.
Andrew brings up a pretty good point. I didn't read that executive order that he signed last night, but I wonder if they do reschedule, is cannabis retroactively covered under that executive order?
Rescheduling makes businesses legal. He just passed the executive order that allows banking for all legal businesses. Done.
But are they actually legal? My understanding, again, I'm not a lawyer. I don't play one on TV, but sometimes I play it on your show. My understanding of reading is that it doesn't legalize cannabis by moving it to Schedule 3, but it allows someone to become compliant with the DEA rules around Schedule 3 substances, and you have to file with the DEA and be approved and comply with certain regulations. So I don't know about that, but you should have somebody on.
It's an interesting question that I think has a lot of more nuance to it than at face value. But I'm definitely going to be looking into that this afternoon.
One last question before you let you run. How will the upcoming decline in Fed fund rates affect your new underwriting?
It impacts cost of capital. And so what a lot of people complain about for this industry is the high cost of capital for it. And so, we've talked before about how do organizations like NewLake or other lenders that are out there, or banks, how do they price loans, how they price transactions. It's based off of their cost of capital. And the way you come up with that is you look at the risk-free rate, and then you add a risk premium on top of that for the risk you're taking. So if the risk-free rate is coming down, as long as you assume that that risk premium stays the same, it should be improved pricing for the marketplace, which would be a benefit for the entire industry if you could either maintain that risk premium or, with improved financial performance, reduce the risk premium necessary to get the adequate return.
Okay, good to know. Always well educated and well explained that both the sophisticated and everyday investor can understand, which is why you're doing well. Long story short, job well done. And most importantly, enjoy the rest of your day, the rest of your weekend. And we'll have you on in the next week or two, because I know outside of even your print, we love having you on to talk about the industry as a whole, and you have a lot to offer. But it's always great catching up with you.
Thanks, fellas. Have a great weekend.
All
right. Thanks, AC.
Bye-bye.
All right. Perhaps most likable guy in the industry, is he not?
Yeah, it's always a good interview, and to go through the NewLake footprint.
Yeah. Well, we continue this earnings season. It rolls on. Next company just reported 164 million in revenue, solid margins at 50.6, and a big move to refinance. So with that, let's welcome in multi-state operator, CEO of Cresco Labs, Charlie Bachtell, back to the podcast. Good to see you, sir. How are things?
Things are going all right. How you guys doing?
Really good. Lots we can talk about, but what do you think, before we get into your latest print? Just like, I know summertime's usually a slow time for the industry, but this is nice, is it not? Like, it seems like there's a lot of interest going on right now.
Look, there's a lot of interest. There's a lot of things going on. There's arguably sort of progress being made on the things that matter most, which is reform on the subject matter. So it's nice to see it. We need things to get across the finish line, but it's nice.
I get it. Yeah. You're a realist, and I know you spent a lot of time in Washington, but until we get something crossed, signed, sealed and delivered, it's business as usual. So with that, let's get into it. As I said, 164 million, solid margins at 50.6, and a big move to refinance 325 million in debt to strengthen your balance sheet. So what's the big takeaway here? Because there's a lot of moving parts here in this print if you're an investor of Cresco.
Sure. The refinance is big. There's over $2 billion coming to maturity here in the next 18 months and 15 months for the sector. So to be out in front of that, to make sure that we're able to take care of the business that we need to take care of is huge. And it honestly, more than just the actual substantive impact of getting the refinance done, reducing the total amount of leverage. It's the weight off the shoulders. It's the focus that goes along with completing that task that now can be redirected to doing the things that we need to do to make sure Cresco's is a successful leader in the industry long term. Yeah,
makes sense. Anthony, do you want to go or?
Yeah, I was going to say, as part of that refi was a big part of it, getting that 125, I think it was 125 million carve out that could be prepaid within that facility. That was definitely one of the bright spots of it. And the rate, 12.5% on the new facility. Was that down from the existing rate?
No, it's a little up from the existing rate, but it's very competitive for where rates are at now. So we were really happy. We had a good sort of partnership relationship with those investors that are part of the facility. They understood the potential and the opportunities that we had, and they worked with us to design a structure that allows us to manage the company the way that we need to manage it, and also take advantage of opportunities that are, I wouldn't even say going to present themselves, that are presenting themselves to Cresco now.
Okay.
You also report, as I said, gross margins, 50%, 50.6% for the quarter, which is pretty strong. So what were the reasons behind that? How are you able to keep those margins so strong, knowing that is probably the big focal point right now for a lot of companies when they're reporting their earnings based on the current environment for the industry?
For us, I would say we prioritize cash more. Margin are good. Margin percentages are good because they're indicators also of actual what drops down to the bottom line. But, we had some good guys in the quarter. There's fluctuation that's going to happen as you're optimizing your footprint, as you're optimizing your operations. So some great cost cutting measures were implemented in the first half of the year that showed themselves in Q2. We also had a couple of good guys that we are based on operational execution, but aren't likely to repeat. We had some recovery of what we had reserved for as bad debt that exceeded our expectations. So again, it's a great sign of execution, but I can't bank on that every quarter. But we're going to have some quarter-to-quarter noise too, as we had said on our Q3 call in November last year. We kind of got caught not having enough capacity in our two main states of Illinois and PA. We brought on that additional capacity in the first half of the year. But when you bring on some new capacity in new facilities, it's not the cheapest price per gram that you're going to have. So we'll be selling through that in the second half of the year, and that'll create a little bit of noise too.
Okay.
How are you thinking about Florida? I know that we saw some reports where prices were down, I think 25% year over year. I haven't really seen that in anyone's earnings, especially some of the companies that are much more levered to the state of Florida. But at the same time, unit economics are up in terms of the consumers purchasing volume. I mean, are you seeing any sort of interesting statistics coming out of Florida, or looking for price wars maybe to intensify in the state going forward potentially?
Hard to speculate on it because we're not one of the largest. We're competing well, but I think from a footprint standpoint, I think we're 8th. From a market share standpoint, we're 6th. So there's definitely a few larger operators in that state that have the ability to dictate a bit more on pricing and unit economics than us. We have seen some pricing pressure down there, but again, what we've always liked about Florida is it's a true execution story, right? Without carrying third-party products on your shelves or being able to sell in other doors, you got to grow it, you got to make it, you got to open the doors, you got to operate it, you got to sell it. So you can have differentiated experiences, differentiated products compared to the store across the street from you, which is a structure that we like.
Absolutely. And I mean, being a Floridian, watching the OMMU numbers, I mean, the last year you've done nothing but climb the charts in terms of market share and sales in the state.
Yeah, for us, it's not so much adult. It's a productive market even without adult use. So for us, we need to bring on some additional capacity down there, because again, you're on an island, right? Can't rely on third-party products. So we need to bring on some additional capacity. And that'll allow us to expand the footprint down there and make sure that we're reaching more consumers.
Sunnyside also naturally fit
works down there
with the brand. Yeah, it works.
Wonder how that Sunnyside dispensary is doing across from Really. You know, the Cubbies are in first place. I'm sure that's helping a few things, right?
Not quite in first place, but we're doing all right.
Are they not in? Oh yeah, Milwaukee, they're the best team in the league right now. But what a location that was, and I was there last October. Never.
I went to my first game. Not to sidetrack, I went to the first game of the year Tuesday night. They brought in that relief pitcher. He gets rocked, booed off the mound, and then he comes back the next day and throws the perfect inning.
Really,
9 pitches, 9 strikes. Yeah, so. It's life, right? That's how life works.
That's baseball for you. I won't get into it, but there's Detroit had an unbelievable bullpen last year, and 75% of their staff is now down in Toledo at the AAA. I don't get it from one year to the next, but listen, we talked about Florida, which is a sunny state, and now it's moved to the next sunny state, which is California. You decided to leave that market, so why now? And there's probably a number of reasons why, including sanity being one, but what were you put a lot of your focus and capital instead now that you've stepped out of California?
Other opportunities. It's unfortunate. Like California should be part of your strategy in cannabis, right? If you go back 5 years and the way that everybody was thinking about the development of cannabis and consumer products categories and an unlock coming from a reform standpoint, like California is important to the cannabis narrative. It's just really unfortunate with the market structure, both the regulatory standpoint, enforcement plays a big part in it. It just is
taxes.
It's a brutal market to operate the business in. So we look at lessons learned. Always want to be getting smarter as you go through these decisions and learn from them. And there's definitely other areas and other markets that we can deploy resources into that'll make Cresco stronger both today and tomorrow. And then we'll look at, as changes happen, we'll look at California again in the future.
Gotcha.
How's Kentucky shaping up? I know that's one market that you have unique exposure to compared to your peers. I think it's going to be a bigger market than people are expecting with that. How's it going so far? or any early?
It's a construction project, right? So it's progressing well. The build there is progressing well. It'll be, everybody has to remember what it's like to launch a state from scratch. It'll have a ramp. We'll have revenue in 26. It'll start to get its legs probably in 27, 28. From scratch medical programs take a little while. Patient adoption, medical community adoption, retailers have to get open, product has to get to market.
Gotcha. Let's move to Ohio, Midwest. Bright spot. You opened 3 stores. Is it early? Are the 3 stores open now, or there's going to be 3 stores open by early 2026?
We'll have 1 before the end of the year, and then the next 2 come on in Q1.
Gotcha. So what's the growth opportunity there? I looked at some numbers, and I know early signs show that Ohio going to be a $2 billion annual market. There were some numbers that came out 700 million, but it hasn't really fully launched its full capacity program. But how would you best describe Ohio in the first 12 months?
Yeah. And honestly, I remember it's probably similar to the way that we've talked about it before on the show, that it really wasn't like a typical AU launch. It was almost like medical plus, right? So this dripped rollout of change, it doesn't create that step function difference from med to AU that we've maybe seen in other markets like New Jersey and others. But what it is going to do is I think it's still going to get to the same spot. It's just going to be on a more gradual sort of appreciation. But we like it. It's definitely a productive program. All of the changes for adult use still have not been implemented. So there's still these like inherent catalysts in structure. All of the new doors haven't opened, ours included, right? So there's just these nice catalyst for growth that'll roll out over the next 12, 18 months, which will make that a really nice, steady growth story for operators that are executing well. And a ton of credit to the team there. Hoodie data showing us to have the number 1 retail share. I think we're number 3 in branded products. So teams performing well there too.
Yeah.
And how are you feeling about PA? I mean, I know PA is one of your big markets. I mean, it's one that you've been a top dog in that market for a while now. And obviously with cannabis, we're seeing mixed signals from some politicians in separate houses in PA, but I mean, how are you feeling about it as a whole?
It should happen.
It
should happen. It is. I think we've all learned, right, the dangers of trying to nail timing on these things. But the time is now. They still haven't passed the budget. I saw your interview with Senator Street, who's been a great partner or advocate for the industry for years, and especially on the adult use side, helping to build bipartisan support and lead the issue. He's right. I mean, they have revenue needs. They have a robust medical program already. Like all of the components are there for an adult use law, including like buy-in from the governor, bipartisan support, infrastructure already in place. We'll see. I hope they can get it across the finish line as part of this upcoming this new budget.
And the tax revenue they're losing from the one big beautiful bill, Medicaid. I was talking to somebody. It's like $300 to $400 million. So if there ever is an example of common sense, like this is it. And I did notice that Senator Street did say if there was a vote today, he think it would pass. But again, I thought that was telling, but I don't know how to take that or interpret that, other than the fact that I can only believe everything he's saying about how, yes, it's very divided amongst the state Senate, amongst Republicans and Democrats, but there are Republicans that are pivoting and gravitating towards the idea. Because at the end of the day, if you're already operating at a deficit of $2 to $3 billion, where does that money come from? And stigma, I think, still in some ways plays a role with some of these state lawmakers, but hopefully common sense prevails, right?
Well, and again, and especially when you already have $1 billion plus medical market there, like it's not some new scary thing. This is something that's well established and already well understood within the state, and that it can be done well. It can be done in a professional, regulated, compliance-focused way. Like, there's just downside risk by delaying it any further. You allow illicit market to entrench itself, intoxicating hemp, that they would much prefer cannabis consumption was done through a regulated, licensed, taxed structure. So yeah, all the reasons are there to do it.
What kind of sales lift would you expect if they did flip?
Because it's already robust, I think it's not going to be as dramatic as some of the other markets that went from a steady medical program to then adult use.
Yeah.
But I would expect, I think projections are of a 50, at least a 50 to 70% increase.
How's Illinois? I mean, Illinois was a very hyped market out of the gate. We know that Illinois had its problems. It's been one of the markets that you've been on the top of the stack for a very long time in your home base. Are you seeing price stability and signs of, let's say, that market trending up in terms of just overall performance?
I don't know if it's trending up. It's a slower decline, but still pressure, right? And I think Illinois is a great example of, you did phase 1 of adult use, and now it's incumbent on the legislators and the administration to figure out what phase 2 looks like. They have to look at the tax rate, and they have to look at sort of the likelihood of success for the operators in the program too. They need to take some action. And definitely, we've talked about it before. The sort of hemp-derived THC. And without going down the rabbit hole too much, it's, I think it's estimated to be $1 billion industry in Illinois. So that's arguably $1 billion that should be part of the regulated cannabis program.
Yeah. It wouldn't surprise me if the intoxicating hemp industry was $1 billion in pretty much every populous state across the nation.
Do a lot of people still drive from Illinois to Michigan?
Oh, I think it's only increased. The exit 1 in Michigan, New Buffalo, was a holdout on adult use for years, and then they just changed maybe 18 months ago. Now exit 1 in Michigan is, and I shouldn't even smile as I say, it is nothing but dispensaries. It's nothing but dispensaries. It went from not being allowed to literally being the face of Michigan as you enter it. The billboards for 30 miles.
Do you ever see that lovely, what an entertaining drive it is from Detroit to Chicago on I-94 West? That's pretty flat and boring, but I think I counted 75 billboards of cannabis dispensaries between Detroit and Chicago. It was wild as to like.
Well, it's the other way, right? So it would be going west to east. So coming across Indiana, which does not have cannabis at all. So that southwest tip of Michigan is able to pull from Chicago and all of Indiana. It's real. I would say that's probably another $500 million in volume that gets siphoned out of state. So again, tax rates, big difference in tax rates that Illinois needs to look at.
Yeah, that's for sure. Listen, I won't bore you with rescheduling questions, but if 280E does go away, what do you think is the biggest change we'd see, I guess, in your finances, and how quickly do you think that would show up?
Their taxes are in the P&L, so you'd see a pretty dramatic impact there. But I think similarly, almost to like getting our debt refinanced, is it'll allow us to focus on other things, right? Which is the next phase of reform, and also just sort of making those strategic decisions for your organization that are based on the direction that you can go. I think all of us right now are having to develop plans A, B, C, and D, depending on what unfolds here in the next 6, 12, 18 months. And it would be nice to focus more on a path of confidence in what direction you can take your company, and a little bit less of having to develop the hedged plans.
Yeah.
Couldn't be better said. I was going to say, couldn't be better said. It's operating a company from a multifaceted approach when you don't know what the future looks like has to be a feat in itself.
Yeah.
You spin a lot of plates.
Yeah. Charlie, does this feel different right now for the space? I will ask, I got to ask the question, like, does it feel different? He's laughing at me.
You've said that's your new phrase.
I know,
but it's different this time.
Does it feel different at all?
Sure. It feels a little different. But it's pen to paper, and so we got to keep doing what we can do to provide the information that's needed in order for a decision to get made. I think, look, if you do compare it to prior administrations, you do have a situation, especially with rescheduling. We've talked about it before. It's an administrative issue. It's not you don't need to get 60 votes in the Senate in order to get it across the finish line. And so I like the fact that it's an administrative issue. And I like, what we've heard previously from the administration for their opinion on this issue. And you see the leadership and management style of this executive. And, that's why I think you add all those up and it feels a little different.
Okay. Well said. Well, I got my answer. Well, let's hope, let's make a date. Cubs and Tigers in the World Series. We'll come down and watch the game at Wrigley's. Does that sound good? All right, sir. Good catching up with you. And let's hope we get some great progress here, as it looks like I would best describe the cannabis industry. It's holding in its ground, I would say, in this latest earnings, which is nice to see. And let's continue to build off this momentum. So with that, enjoy the rest of your day. Thanks for checking in. Let's keep in touch, okay?
Thanks, guys. Good to see you.
Thanks,
Charlie. You made me laugh when I asked that. Does this feel different? Does this feel different?
You've been using that line quite often as of recent.
Hey guys, does this feel different? It's got to be different.
Does it feel different this time? Is the equivalent of soon?
Yeah, good point.
It's or imminent.
Hey, what is Canopy Growth doing now? We got to the top of the show. It was up 36%. Now
it is down to 20.
Down to 20.
Yeah, it's still up. It's still up considerably.
That's what I got to wear. I got to get a T-shirt. It says, "Does this feel different?"
Nope. We're making an executive decision not to do that.
Dirty the Grower is saying, "Don't bust my chop, Shad." I don't know what that was about. Maybe it was about the question that I asked about people from Illinois driving into Michigan. But that is wild.
There's a reason Michigan is a $3.3 or $3.5 billion market. Like, Michigan doesn't have the population to maintain
$500 million coming in that corridor area, the southwest part of Michigan, from like Indiana and Illinois. Like, that's crazy revenue.
Yeah, but that's what happens when your pricing is peanuts.
I get it.
Yeah, I think a gram of like shatter in Michigan is like $8. Like, that's insane.
Yeah.
It's not $8 in California.
What is it in Florida?
Of like the stuff that they're probably charging $8 for, 20.
Let's look real quick as I'm looking at some of the notable numbers from Canopy Growth. Strong growth
Luke's
in adult
doing
cannabis.
Yeah.
Well, we talked
Luke's
about him being an
job.
executor.
Yeah.
And it appears
Luke's
he's doing
a
his
great
job.
He's reducing SG&A. He's improving margin. He's improving revenue. He's focusing on Canadian medical and rec, global cannabis. They just brought in a president to run those operations, who I'm sure we'll hear from in the next couple of weeks. But yeah, I look forward to going through the earnings report with Luke on Monday. And I mean, the stock is responding very well to the earnings report. Say what you want about Canopy, but he's doing all the things that need to be done to get them in financial shape, as well as retiring debt.
Yeah, they're paying off more debt. Looking at this right now, Claiborne pre-roll joints. Sales infused pre-roll joints surged 58% sequentially compared to the prior quarter. They rank number 2 in Alberta, number 3 in Ontario, and number 3 nationally in that category. Canadian medical cannabis net revenue rose 13% year over year, aided by more insured customers, larger orders, and a broader spectrum of online product assortments. All in all, net revenue jumped 43% year over year, driven by increased distribution and higher consumer demand for new products, especially, as I said, in the Claiborne infused pre-rolls. So ideas are one thing, but execution is another. And we emphasize on that a lot. Right?
Yes. Luke is executing. So you got to execute. And the only way to execute... Do the guys on screen respond to the live chat comments? I would have to be inclined to say yes.
What was the question? Sorry, what was that?
Do the guys on screen, which I'm sure he's implying us, respond to the live chat comments?
Yes.
I would be inclined to say yes. Very regularly.
Dirty the Grower knew where I was going with this. You cut me off there, but look, let's be real. If your dispensary tech system freezes every time someone tries to use Apple Pay and your compliance software still thinks you're selling oregano, you've got big problems than your bud tender's astrology obsession. It's time to call in Dutchie, the John Wick of cannabis tech. Fast, precise, deadly to disorganized operations. Dutchie powers over 6,500 dispensaries and $22 billion in sales. That's more revenue from OnlyFans during the COVID lockdown. They've got you covered with point of sale, e-commerce, compliance, payments, basically everything, but rolling the joints and breaking up that awkward conversation in your waiting room. To learn more, visit business.dutchie.com. What'd you think of that one?
John Wick and OnlyFans.
I know.
Interesting.
Thought I'd switch it up a bit.
Yeah.
But listen, if you are a dispensary owner and you want one clear, precise system, they partner with over 500 dispensaries and $22 billion in
Tech stack is second to none. I see it everywhere I'm checking out.
Up in smoke. Does it feel different this time? That read felt different.
Why did MSOS stop buying MariMed? I don't have the answer to that. Neither does Shad. The only two guys that do have the answer to that would be Dan Aarons and Noah, and they are available on Twitter.
By the way, we're going to be speaking with John Levine, the CEO of MariMed, to talk about their latest earnings, plus the launch of Delaware last week. We have a pre-record coming up in 1 hour with John, so we're going to push that out first thing Monday morning. So for all you MariMed investors out there, make sure you log on at 8 a.m. Monday morning. We'll have our interview with John Levine coming on. So that'll be an interesting conversation because I know there's a few people that have reached out pertaining to that story. And they got good brands. And we want to talk about, obviously, the entering into that deal with Tilt into PA. So they've made some interesting moves. So we'll learn more about, the latest print and a few business transactions that they've done as well.
And Lance, we are not platforming Kevin or Luke. Like I said, I think a couple days ago, it's probably best to just ignore Sam. They don't get any engagement. The only engagement that they get is from the MSOS people. They have no audience of their own. They have no one that really cares about their cause, except for Senator Langford out of Nebraska or Kansas or wherever the hell he's from, the flyover state. We're not platforming Sam anytime soon.
Arns, can you cue up the mic drop music so we can go into the weekend on a lighter side? Some of you have reached out asking, well, Guap's commenting right now. Guap, if you're listening right now, we definitely need a mic drop. It's been way too long, buddy.
Kevin Sabat is a Timu adult Fred Savage.
Sorry, you're what was that?
Christopher Brady's pretty eloquent.
All in all, what'd you think of the week, my friend?
It's great.
Yeah.
Prices are high. Numbers are going up. Making money. Can't complain.
Can't complain. It's kind of nice. It was a long time before we didn't talk about stocks and cannabis, but everything that's old is new again, right? Okay. Next week, we've already got a lot of stuff confirmed. Jason Wild and Ziad are coming on. I know you teed that up earlier this week, along with Luke Maggio from Canopy. That's kicking off first thing Monday. George Arcos is going to come on Wednesday from Verano. So we got the big boys coming on. And then a week from today, we've got Bina Goldenberg from Organigram to talk about their latest print. So
we'd love to get the guys from Ascend on. If you're watching this, Ascend, feel free to email us and jump on the show.
A lot of people ask about Ascend from our platform. We need to re-engage with them. So hopefully. Quick update. We did hear back from Senator Rand Paul's team. He's now on recess. We were hoping to get him in this week or next week, but he's not back till September 1. So we're trying to get either Wednesday, September 3rd or Wednesday, September the 10th on the live stream with Senator Rand Paul. So I just wanted to give you all a heads up. Something that we have not forgot. I'm going to do a Cannabis in 5 tonight that talks about this executive order for banking that President Donald Trump signed yesterday, and then the refiling coming soon with David Joyce and what that potentially could mean for safer banking. Anthony might roll his eyes listening to that video, but I'll make sure I keep it very neutral. And then we'll have the weekly recap Sunday, 4 o'clock. Lots to get into this week because there was a lot of earnings plus policy conversation as well. So confirming as well, David Benz, that Brady Cobb will not be on the live stream here today, but we'll keep you posted when he is. All right. We got to get Dan from the Chart Guys on next week too. Okay, it's 12 o'clock. We're now in. Thanks, everybody. Scan that QR code. Become a Daily Baked In newsletter subscriber if you want to get the big takeaways from the latest earnings season and what it means for each company. Scan that QR code to become a Daily Baked In newsletter subscriber delivered to your inbox weekdays, Monday through Friday at 8 a.m. Eastern Time. Again, thank you. AB, enjoy your weekend. We'll see you guys all back here Monday at 4 o'clock with Luke, Jason, and Ziad. See you next time. Well, I liked that one, didn't you? Let us know by leaving your comments below and stay connected with us here at the Trade to Black podcast. We appreciate you logging on here today and learning more information about where this industry is headed. If you have time, make sure to like, subscribe, and smash on that bell for all notifications. And keep the conversation going by leaving some comments below. We always love to get your feedback. In the meantime, enjoy the rest of your day. And thanks again for watching our latest Trade to Black podcast.